Australia has a housing shortage. We all agree on that. Not enough homes, not enough rentals, just not enough supply. And yet somehow the policy response from the federal government has become, let's discourage all the people currently funding the overwhelming majority of rental housing. That's the contradiction sitting at the centre of the entire housing debate right now. Because whether people like it or not, investors play a critical role in Australia's housing system, not institutions, not governments. Everyday Australians investing for their future so that they can lessen their dependence on state pension. Hello everyone, I'm Kate Hill, and if you're ready to build real wealth through smart, no-nonsense property decisions, you are absolutely in the right place. So let's have a look at why you shouldn't really punish investors to solve a housing shortage. The underlying assumption behind the recent housing policy changes is that investors will simply redirect their money into newly constructed housing. In theory, that logic to someone out there might sound reasonable. Clearly it does, otherwise they wouldn't have implemented it. Reduce incentives for established property investment. Push investors towards new builds. Increase housing supply. But this assumes investor behaviour works like a switch. Newsflash, it doesn't. Investors are not robots responding blindly to tax settings. They assess risk, capital growth potential, holding costs, supply pipelines, construction risks, resale depth, long-term demand. And historically, investors have preferred established housing. Established housing is often where the existing infrastructure sits. It's where most people actually want to live. If you're finding all my content helpful, please hit subscribe. I do share a lot of strategies and insights to help you grow long-term wealth through smart property investing, and I really appreciate it. Australia's affordability problem is not primarily driven by investors. Another news flash. It's driven by restricted land supply, planning delays, infrastructure bottlenecks, labour shortages, rising construction costs, population growth outpacing delivery. And no, it's not just all the migrants. There are structural supply problems. Tax settings sit very much around the edges. You cannot solve a supply crisis by attacking demand without massively increasing supply at the same time. Australia's rental market is already critically tight. If investor participation slows, then fewer rental properties are added. Newsflash. Fewer investors upgrade portfolios. Some investors exit entirely. Rental supply tightens even further. And what do you think happens then? The rents will rise. Ironically, the very people that these policies claim to help, younger Australians and renters, will ultimately be the ones feeling the greatest pressure. Even if investor demand shifts towards new build, Australia's construction system is already under enormous strain. We already face, I'm going on about this every bloody week, aren't I? Labour shortages, build delays, infrastructure bottlenecks, rising material costs, limited titled land supply. The idea that the market can just suddenly absorb a huge wave of redirected investor demand is optimistic at best. In reality, increased competition for new builds will simply increase construction costs, tighten land supply even further, extend build timeframes, place even more pressure on delivery capacity. One of the biggest flaws in the current debate is the assumption that investors are primarily motivated by tax deductions. Newsflash number, whatever it is for this video, most are not. Most investors pursue long-term capital growth, scarcity, owner-occupier appeal, proven demand fundamentals. It really goes to show that this current government seems to have absolutely zero idea of why most mum and dad investors invest in property. Tax settings matter, of course they do, but they are rarely the actual primary driver of investment decisions. Housing investment has long been a capital gains game, and that is why investors consistently favour tightly held suburbs with strong demand fundamentals and long-term scarcity. Australia relies heavily on private investors to supply rental housing. That is simply the reality of the system. The government doesn't want to own millions of properties. If governments genuinely wanted to improve affordability long term, then the focus should be on faster land releases, streamlined planning, infrastructure coordination, increased construction capacity, supporting efficient housing delivery. Because until supply meaningfully improves, nothing else changes. You can't punish investors and simultaneously expect them to solve the housing shortage. It just doesn't work. Intergenerational inequality is real, of course it is, but housing affordability pressure is real. But discouraging investors without solving supply constraints risks worsening the very problem that policymakers are claiming to be fixing. Because the housing market does not run on political slogans, it runs on supply, and right now Australia still just doesn't have enough of it. Thank you so much for watching, everyone. If you're serious about building wealth through smart and well-researched property decisions, stick around. There is a lot on my channel to support you. I will see you in the next video. Bye.